Hello, everybody, and welcome to exercise 11-16 or impairment. This is not when assets get drunk. Rather, what this is when assets may have impaired value. This is extremely important because you're going to be seeing this happening more and more often. Although I think that companies generally right now are overvalued, but we'll go ahead and here and kind of take a look at what's happening. So the first thing we do is an asset impaired? And so what I'm going to do is I'm going to compare, and my rule is I compare the expected future net cash flows. If this is less than the net book value of the asset, then my asset is impaired. And what I need to then do is write down the asset to the fair value. So when I look at here, what is the net book value? My cost is 9 million. My accumulated depreciation to date is 1 million. So my net book value is going to be $8 million. So since $8 million is less than, or is greater than, so since the net book value is greater than of 8 million, is greater than the expected cash flows of 7 million, the asset is impaired. Okay, so what I then need to do is I need to write this asset down to its fair value. So if my net book value is 8 million and my fair value is 4.8 million. And by the way, if my net expected cash flows were greater, even if my fair value is less, I don't do anything, because when I have a fixed asset, the thought is I'm not holding this for investment. I'm using it in my operations. So if the cash flows are greater than the net book value, I don't do anything, even if the fair value is below the net book value. Okay, so my adjustment is going to be 3.2 million. So here, to record this, on 12/31/20, I'm going to debit loss on asset impairment for 3.2 million, and I'm going to credit accumulated depreciation. Okay, so that's what I do. And now to record the depreciation expense for 2021, and if I'm assuming that this equipment will have a remaining useful life of 4 years, what does that look like? Okay, so in terms of my T accounts, I had over here my equipment had a balance of 9 million. The accumulated depreciation was 1 million. And then over here, I had the adjustment. So now my total amount of my accumulated depreciation is $4.2 million. And I'm assuming that there's no salvage value because it doesn't really talk about that. So in terms of going through and now recording the amount of my depreciation to take, so over here, So this is going to be 4,800,000 or 9 million minus 4.2 million. There's no salvage value. So the amount of the depreciation that I'm going to be going through and taking is going to be 1.2 million. To record depreciation expense on 12/31/20, I'm debiting depreciation expense, and I'm crediting the accumulated depreciation. Okay, and it also would need a description and the like. So over here, when it comes to the fair value of the equipment is now 5.1 million. I do not make any adjustments when I'm going through, once I impair the asset, and if I'm using it in my operations, I do not go back through and write it up. I would impair it further if I needed to, but in this situation right here, I'm not going to do anything else. So here's something different. So assume the same information in exercise 11-16, except that Suarez intends to dispose of the equipment in the coming year. It is expected that the cost of disposal would be $20,000. Okay. So over here, now if I'm going through and now I'm saying if I'm disposing of the equipment, that I have to go through and record it at fair value. This is no longer property, plant, and equipment. This is something we call an asset held for sale. So what I'm going to need to do is to go through and to take right over here. So my net book value is 8 million. The fair value is at 4.8 million. So my loss on disposal, or basically my impairment loss, is going to be a total of 3.2 million. However, that's not the end of it. If it's going to cost me an estimated amount to dispose of it at 20 grand, so that's going to add to my loss. So over here, so my total impairment loss is going to be 3,220,000. The way I'm going to record it is going to be the same way. So I'm going to go ahead and debit loss on asset impairment of 3,220,000, crediting accumulated depreciation. Okay, so now prepare the journal entry to record depreciation expense. I don't record any because I am not using the asset. Okay, so the asset was not sold by December 31st, 2021. The fair value of the equipment on that date is now 5.3 million. And prepare the journal entry, if any, to record this increase in fair value. Since I am holding the asset for sale, what I can now do is I can say, okay, anytime this thing goes up or down, I'm going to be recording. If it goes up, if it goes down, I always have to record it. But if it goes up, I can basically do a impairment recovery. So if I come over here and I'm like looking at this, I can say, okay, what does my balance sheet look like right now? So over here, I have basically So my accumulated depreciation on the equipment before was 1 million. I added this over here. And so my equipment value was at 9 million. So my carrying value for this is going to be $4,780,000. If the new fair value is 5.3 million, but the cost to dispose it is still 20, then the new net proceeds I would be getting would be 5.3 million minus 20,000, or 5,280,000. So this is the new net proceeds. Okay. So this already includes the disposal cost, so I want to be also making sure that this has it too. So my gain on this, or my recovery of loss on impairment is going to be 500,000. How do I record this? Well, on 12/31/21, I'm going to debit accumulated depreciation for 500,000. And this is going to be my recovery of loss from impairment. So let's take another look at both of these questions before we say goodnight. So if I'm using an asset in my operations, the first thing I'm going to go through and do is I'm going to say, okay, what are the expected future net cash flows from using this equipment? If it is less than the net book value, I have an impairment. That is not going to tell me the amount of the impairment, but it's going to tell me that my assets are impaired. Then what I do to determine the amount of the impairment, I'm going over here, 8 million minus 4.8 million. So my adjustment is going to be 3.2 million. So I have a loss on asset impairment. I'm comparing the net book value to the fair value to determine my adjustment. So then over here, I have a loss on asset impairment. When I go to depreciate it, I continue to use whatever the new information is, and I'm depreciating the asset because I am using the asset. Very, very important. If the fair value of the equipment goes up, I do not care. Doesn't matter to me. So no big deal. If it goes up or down, it doesn't matter to me because I'm using it. Now, if the fair value is less, that would be a problem. But over here, not an issue. Okay. Now, if I'm holding the equipment for sale, it's no longer property, plant, and equipment because I'm using property, plant, and equipment in my operations. So over here, what I'm going to go through and do is I'm going to say to myself, okay, what's the entry I need to record the impairment? Well, here's my net book value, fair value. My preliminary loss is 3.2 million. But I not only have that loss to get rid of this asset, it's going to cost me another 20 grand. So I have to add that to my total amount of my impairment. So my loss on asset impairment, and again, because I'm disposing of it, here I'm using it, it's not included, but because I'm disposing of it, I need to be adding this in. So my loss on asset impairment is now going to be 3,220,000, accumulated depreciation of 3,220,000. I do not record any depreciation expense because I am not using the asset. That's done. Then over here, for this last part, I do make adjustments to fair value. I write it up, I write it down, and it's because I'm holding it for sale. So here, what I do first is I say, okay, what's the carrying value of my equipment? Well, it's 4.78 million. The equipment less the accumulated depreciation. What I then do is I compare this to what my proceeds would be. So it now has a fair value of 5.3 million, but it's still going to cost me 20 grand to get rid of it. So the amount I would be able to get for it is going to be 5,280,000. So my adjustment for the new fair value is going to be the difference between this carrying value and the new amount, or 500,000. But because this is going in the opposite direction, I would go over here and I would debit the accumulated depreciation, and then I would go over here and credit the recovery of loss from impairment. Now, I also want to be really clear on this too. What if you had some kind of shenanigans where they started trying to write up the asset beyond 10 million, right? They can have a recovery, but if they're holding the asset for that long, that smells really suspicious. And that's when, you're kind of saying like, what's going on here? So just be careful on that when you're out in the field. And thank you for watching this video, and I'll see you on the next video. Have a great one.